Good afternoon, everyone, and welcome to Stock Market Today. It's Alissa, Coram, and Justin Nielsen here. And on today's show, we're going to be taking a deep dive into the technicals for the broad market action. And we're also going to be taking a look at Chegg and Regeneron. But first, let's take a look at those major indexes. So here we have a chart of the Nasdaq. It was a day where we saw widespread losses, substantial losses, but we were able to come off of the lows for the day, rallying into the close in about the last half hour. But what do you make of the session today, Justin? Because we did see the Nasdaq undercut a short-term moving average here, declining 1.6% for the day.
Yes, and now keep in mind, this is really a spillover effect to a large degree, I think, from the rough action that we had yesterday. So you really had a downside reversal. We just barely got into recent new high ground on the Nasdaq yesterday, and then had a horrible close, undercutting the previous day's low. And so now that weakness just kind of spilled over today. You know, a lot of people were talking about Jerome Powell's comments, the Fed chair's comments today, as potentially a catalyst that kind of got the day started in a rough way. But the reality is, we kind of had that weakness at the close yesterday, and it just really spilled over to today. Now, there was a little bit of a rally at the end of the day, as you mentioned, but it wasn't much in the scheme of things. So that did put us down below the 10-day moving average line. But you can see that we did get support, or actually we didn't even come down to quite yet, the 21-day exponential moving average line, which is that green line that you're pointing to. And so this is going to be one of those key indicators. If we can kind of stay above that, that would be good. Now, keep in mind, we had this move starting on May 4th, and we had 6 days up in a row. So a pullback really was expected at this point and was due, but we didn't get to a point where, this was actually very much heavier than I expected. But the fact that we are still staying above that 21-day, and we're still staying above the low of that May 4th day, kind of speaks to the strength of the Nasdaq. Now, if we can kind of contrast that with the S&P 500, a lot of people have been talking about how the S&P 500 has a lot more exposure to what's called the real economy. That's, your financial stocks, your a lot of these industrial names where, factories are closed, that have been a lot more affected by the shutdown, retail, a lot of those things. Now, this is a very different picture. You can kind of see that we did undercut the 21-day moving average line on the S&P 500 today. We had already undercut the 10-day line yesterday, and that May 4th low that we are still well above on the Nasdaq, we barely undercut that today on the S&P 500. So it's a very different picture of strength, with the Nasdaq being much stronger than the S&P 500 right now. So you look at your portfolio, and your portfolio should really reflect kind of that shift to more Nasdaq-centric names versus S&P 500 and Dow Jones Industrials.
Yeah, all very good points there. And I think also when you put this in the context of the incredibly strong run-up that we've seen, that's another thing to note, that this rally is not totally immune to those coronavirus-related headlines, because we had Dr. Fauci coming out yesterday afternoon that could have contributed to the bearish action we saw yesterday. And like you mentioned, Fed Chief Powell today also coming out. So just because we have run up so much and have been so resilient in the face of mounting coronavirus numbers and job losses and all the economic indicators, doesn't mean that we are totally immune now to, again, those headlines.
Absolutely. And again, look at the Nasdaq again. We're not very far off of our highs at this point. So it's really astounding that we've come up so much. And so you just have to expect some days to be down. You're not going to be up every day. And while it never feels good to be down a few days, especially when you're getting used to making money every day with 6 days up in a row on the Nasdaq, down days are just part of the game. And so this really wasn't too bad. I mean, we were down less than 2% today. We were down about 2% yesterday. In the scheme of things, given the run, this is very normal. And that's why I'm really focused on that 21-day moving average right now.
Exactly, looking at the 21-day. We've also on IBD Live been drawing some channel lines.
Yeah.
So for more in-depth analysis on this, make sure you tune into IBD Live tomorrow morning. But Justin, you know what? I think another important thing to mention here is for those who have been very diligent about screening high quality stocks and focusing on those stocks that have been outperforming and, you know, working on those strong chart patterns and turning in strong quarterly numbers, those are the ones who are more likely to be resilient when we do see big down days like today.
Yeah, and there are those coronavirus plays, as we've been calling them, where they are actually benefiting in some ways from either the shutdown or in some ways from the, you know, the stay-at-home kind of economy, or in the medical, you know, field. There's a lot of the biotechs and drug companies that are also seeing movement there. And so Chegg, this is one that we put on leaderboard on May 5th. So this was right after the earnings came out. We saw this huge gap up, you know, that looked like it was happening after earnings. And, you know, we played that very early at the beginning of the day, because a lot of times you can find that those earnings gaps, even if they seem very scary, they can actually continue going up
Mm-hmm.
much more. And that's what's happened with Chegg. So Chegg, you look at this chart and it's almost like, what pullback? You know, this is just continuing to move higher. It was up almost 5% today. And so this is just really kind of, now one of the things that they benefit from is, okay, online textbooks. You know, this is something where a lot of schools, having moved to remote learning, I mean, of course, you know, Chegg is going
Right.
to benefit from that to a certain degree. But this has been a very, very powerful move. And this earnings season was very, very important to look at how many stocks were able to move strongly off of their earnings,
Mm-hmm.
despite the fact that they were kind of pulling back guidance in a lot of ways, because there is still a lot of uncertainty as to how this economy recovers.
Yes, definitely. So yeah, great case in point here with those earnings gaps and seeing further gains. But at this point, time to just wait and see
Yes.
it set up again, Justin, and not chase it here.
Yeah, absolutely. It's extended right now. So again, if you bought it on May 5th, again, when Leaderboard put it on, you've got good gains on this already. And this might even be one where you're deciding to hold on to it for a little bit longer to see if these gains will continue. But it's very rough starting this extended on something, because a pullback would be very normal here, and it would just be too easy to get caught in that pullback if you bought extended up here. So keep it on your radar, because a
Yeah.
lot of times these stocks will set up again. They'll give you multiple chances. If this is a big winner, it's going to give you multiple chances on the way up to get into it.
Definitely. All right. Well, speaking of multiple chances, let's take a look at Regeneron, another stock that we've been talking about quite a bit. Just an incredibly strong run this year. So a few pullbacks, and this is one that was looking a little extended, but now setting up again.
Yeah, so I mean, this isn't your typical base in terms of its length right now, but you are seeing a little bit of a consolidation. You could almost even, you know, call it a cup with handle, but just on a very short-term scale. You know, usually we like to see 7 to 8 weeks at least for a cup with handle, because it is important for them to put in that time when they
Mm-hmm.
do a base structure. But you are seeing that this is kind of just settled down for a little bit, and it's a nice setup. So if this is one that you missed before, this could give you another opportunity to kind of get in, you know, sneak in a little bit at this level. Or if this is something that you had already, you might even be able to add some shares here. We like to add on the way up rather than trying to average down, because we like to put more money into our winners and get those to be our larger positions.
Definitely. And if some of these concepts are a little new for you, looking at these more advanced buying tactics and patterns that we look at, make sure you tune into IBD Live every morning. That's where we're really almost hand holding our audience and showing them these real-time setups and helping our audience learn what to look for in top stocks and how to find those actionable opportunities.
Yeah, so many people have talked about how they've kind of had a good understanding, but we've just been able to kind of increase their learning so quickly, because again, we're doing it real time and we're seeing those examples, and we're able to go into a little bit more depth. I mean, we're doing
Mm-hmm.
over an hour each day, and so it's almost like a mini seminar each day, and it's again what's acting right and what's acting kind of a little funny, and so it really gives people a good sense of how to treat their own portfolios and to recognize those setups as they occur in the future.
Yeah, that's right. We love it. And if you haven't checked it out yet, we hope you do. Go to investors.com/IBD live. That's our morning live stream starting 10 minutes before the opening bell, running through the first hour plus of trade. So we hope to see you there tomorrow morning, and we'll see you right back here tomorrow after the close. Thanks for watching.